Joining us, Matt Bryson from Wedbush, is an equity research senior vice president covering the semiconductors. So Matt, just kind of going straight into TSM here, what'd you think about the report? Because the market liked it, but now likes a little less than it did a couple hours ago.
Yeah, no, I think in terms of fundamentals, it was all good news, right? They told us that not only were gross margins higher in the quarter, but Q3 was better than expected. They lifted their guide for the year, and then they told us things about 2025, like they're going to be bringing on a whole bunch more CoWoS capacity. So they're seeing more AI chip demand. And despite them bringing on more capacity, they also now don't think that they have enough to meet demand till the end of the year. So all in all, it was all good news from TSM.
What's the impact of possible supply constraints? Good problem to have too much demand, but does that give us reasoning for why their range for guidance is kind of wide around the estimate?
No, I mean, on the constraint side, right, it gives you more visibility. So I don't think that creates any width in terms of estimates. And again, that's a good thing for everyone, right? Even if I'm NVIDIA or I'm Broadcom and I can't get enough supply, that just pushes demand one quarter out, right? So that's having more visibility. Having constraints almost always a good thing for chip companies.
Okay. As far as being able to wring out the most for the volume right now, it seems like margins hit at least where the market wanted them to be, profitability, all that stuff look good to you?
Yeah, no, I mean, margins are going up, and management multiple times on the call said, our longer term outlook is 53% or more, and they really emphasized that or more portion of their longer term guide. So in my mind, the implication is they are looking for something more than 53% next year. And remember, historically, TSM had been a company that kind of had 50% type gross margin. So again, it looks like they're targeting something closer to what we saw during the COVID period when Taiwan Semi managed to put gross margins up that were around 60%.
Okay. So pretty good stuff there with the outlook on margins. As far as spending goes, it's kind of a corollary point to that. Do you want to see higher or lower CapEx? Because sometimes the market wants that, sometimes it doesn't. And if you're in the middle of a huge, secular revolution, I would think spending may not be a bad option.
Yeah, so they raised their CapEx spend. So they went from 28 to 32 billion to now they're 30 to 32 billion. So the high end of their former guide. With industries that are more commodity-like, people get concerned around there being more CapEx because potentially you have oversupply. With Taiwan Semi at the high end of the market, which is where a lot of this CapEx is getting spent, they're a virtual monopoly. So you don't have to worry so much about supply. When they raise spending, it tells you that they think there's more demand. So again, I think it's a relatively good thing for everyone in the sense that they're lifting CapEx now.
Okay. Looking at valuations going forward, I mean, naturally going to trade a little bit lower than the designers of the chips as kind of the manufacturer. That makes sense generally, or what kind of price level do you think makes sense for TSM?
Yeah, so we've got a price target of on the Taiwanese equity of 1,175 NT. That's kind of high teens type multiple on 2026 numbers. If you look at historically, TSM's traded a bit below that, but then historically they hadn't been a monopoly at the high end of the market. They hadn't seen these additional revenue opportunities. So they talked about now looking at the market as Foundry 2.0. And while I don't love the language necessarily, what they're encapsulating in that is all the advanced packaging that they do, for instance. So additional value that they're providing the clients, and whether it's that advanced packaging or their core foundry business, they're seeing better gross margins. And so when you're a virtual monopoly with better gross margins in a market where AI is driving faster growth, you should be trading at a premium to what you've seen historically.
Sure. What about the rest of the group? How much intel does this give us? And then also, I guess I should ask maybe before that, hold on a second, actually, the political thing. I mean, you can't price any of that, can you, Matt? I mean, like, well, you know, commentary around Taiwan, like, hey, that can't, is there any way to put that in the model?
It's hard to put in the model now. So what I'd say, going to kind of general thematic, what does this tell us about end markets first? We've been seeing positive signs across semis, across hardware over the last 3 months. So strength in servers, better handset metrics, PC numbers aren't bad. So I think what Taiwan Semi just gave us, that certainly supports all of those data points. And then they said, you know, it was a combination of HPC, so servers, both AI and standard, and then smartphones, that led to the strength in Q2. When you look at it, and so that's good for the semi-complex in general. When you look at it from a political standpoint, certainly there's political risk. There's been political risk. The thing about Taiwan Semi in particular is I'm not quite sure from a political standpoint what anything the U.S. administration does that can really hurt Taiwan Semi, in the sense that you are looking at a company that, again, is a virtual monopoly. So yeah. Even if you're favoring
making our chips,
companies, yeah, and they're moving to the U.S. too. So you know, I just think that there's no replacement,
right?
And so when I look at it,
because the market rallied intel yesterday on it, which was kind of that was kind of an interesting angle, possibly, but like they don't really have the capacity to do what NVIDIA needs to get done right now.
They don't have the capacity, and frankly, they're you know, at least two generations of technology away from competing if they execute.
Yeah.
And so there's just no choice.
Okay. All right. So in terms of fundamentally, though, does the guidance that we saw from TSM, any of the commentary, does it give us any early sneak peek into what to expect from NVIDIA, AMD, any of the others?
Yeah. I mean, I think when TSM is talking about CoWoS capacity, them doubling, more than doubling production this year, looking to double it next year, and maybe not catching up to what end market demand is. Certainly they're supplying a bunch of companies, right? It's not just NVIDIA, it's Broadcom, it's AMD, it's some of the CSPs, but within that, NVIDIA is the bulk, is the largest single consumer, and the majority of demand. And so when they tell you they're going to double production and then double it again and still might not catch up to demand, I think that tells you that NVIDIA, one, is looking at pretty good results, and two, it has a pretty optimistic view on what their future looks like.
All right. Appreciate the analysis. Matt, thanks for the time. Good stuff. Important conversation today. I appreciate that. Matt Bryson, Senior Vice President of Equity Research at Wedbush Securities.